Most traders believe the market is the enemy. They think the market is difficult to understand, difficult to predict, difficult to master. And because of this, they spend years trying to master charts, indicators, and strategies. But after enough experience, many traders slowly realize something much deeper. The hardest thing to master is not the market. It is yourself, your emotions, your reactions, your discipline, your patience. And that is exactly what I want to talk about in this video. How to master yourself before mastering the market. Because this is one of the biggest mindset shifts profitable traders eventually understand. The market is not only testing your strategy, it is testing your emotional control every single day. If you stay with me until the end of this video, you will understand why self-mastery matters more than most traders realize, how emotional behavior destroys consistency, and how you can slowly build the mindset required for long-term success. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, and long-term consistency. Now let us begin with a simple truth. Most traders focus too much on the market and not enough on themselves. They study charts for hours. They study patterns, strategies, indicators, but they spend very little time studying their own emotional behavior. And this becomes the real problem, because your psychology controls how you react to the market. Now let us go deeper. The market itself is neutral. The market does not force you to overtrade. The market does not force you to revenge trade. The market does not force you to risk too much. Those actions come from emotional behavior. And until you understand this deeply, real consistency becomes difficult. Now let us talk about fear. Fear is one of the biggest emotional forces in trading. Fear causes hesitation. Fear causes early exits. Fear causes emotional decision-making. And many traders do not even realize how strongly fear controls their behavior. Now let us talk about greed. Greed creates another psychological trap. After a few winning trades, emotions become stronger. Confidence turns into overconfidence. Discipline disappears. Risk increases emotionally, and suddenly, one emotional decision destroys previous profits. Now let us talk about another important truth. Self-mastery is really emotional awareness. It means understanding your emotional patterns clearly, understanding what triggers impulsive behavior, understanding what causes emotional mistakes, because awareness creates control. Now let us move into real trading examples. Imagine a trader who takes a losing trade. Immediately, frustration appears. Emotionally, they want revenge. So they take another trade impulsively, then another, then another. At the end of the day, one small controlled loss becomes a large emotional loss. Now imagine another trader in the same situation. They also feel disappointment, but they pause. They recognize the emotional pressure. They step back calmly. They protect their mindset before protecting profits. This is self-mastery. Now let us consider another situation. A trader sees a strong market movement. Fear of missing out appears immediately. They chase the trade emotionally. The trade fails. Now imagine a disciplined trader. They see the same market movement, but they stay patient. If the setup is gone, they accept it calmly. They do not allow emotions to control decisions. This emotional discipline creates consistency. Now, let us go deeper into psychology. Most losing traders are emotionally reactive. Their emotions constantly change their behavior. After wins, they become careless. After losses, they become fearful. After frustration, they become impulsive. This emotional instability creates inconsistent results. Now let us talk about patience. Patience is not only about waiting for trades. Patience is about controlling emotional urgency. Because emotionally, the human mind constantly wants action. But profitable traders understand something important. Doing nothing is sometimes the best decision. Now, let us talk about discipline. Discipline is not about feeling motivated all the time. Discipline is about following your process even when emotions disagree, even when frustration appears, even when boredom appears, even when fear appears. This is real self-control. Now, let us talk about another important truth. The market constantly exposes emotional weaknesses. If you are impatient, trading will expose it. If you are emotional, trading will expose it. If you lack discipline, trading will expose it. And many traders become emotionally uncomfortable when they face these realities, because trading forces self-awareness. Now let us talk about ego. Ego destroys many traders. Ego wants to be right. Ego wants constant winning. Ego hates accepting mistakes. And because of this, traders hold losing trades emotionally. They avoid accepting losses. They protect ego instead of protecting capital. But profitable traders think differently. They understand losses are normal. Protecting capital matters more than protecting pride. Now let us talk about emotional stability. Emotional stability means staying balanced during both winning and losing periods, not becoming too excited after wins, not becoming emotionally destroyed after losses. This balance creates better decisions. Now let us talk about consistency. Consistency does not come from emotional excitement. It comes from stable, disciplined behavior repeated over long periods, and stable behavior requires self-control. Now let us go deeper into long-term thinking. Most emotional traders think short-term. One losing trade ruins their confidence. One bad week destroys motivation. But profitable traders think long-term. They understand growth takes time. This mindset reduces emotional pressure. Now let us talk about another important truth. You cannot fully control the market, but you can control your reactions. This is extremely important. You cannot control outcomes, but you can control discipline. You can control risk. You can control emotional behavior. And this is where real power exists. If this video is helping you understand the deeper psychological side of trading, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important concept. Self-mastery requires emotional honesty. You must be honest about your weaknesses, your fears, your impulsive habits, your emotional patterns, because without honesty, improvement becomes impossible. Now let us talk about overtrading. Overtrading usually comes from emotional discomfort, boredom, fear of missing out, the need to recover losses quickly, the need for excitement. And until traders learn emotional control, overtrading continues repeating. Now let us talk about emotional recovery. Professional traders recover differently after difficult sessions. They do not carry frustration emotionally into the next day. They pause, they reflect, they reset mentally. This emotional recovery protects consistency. Now let us talk about another psychological shift. Profitable traders stop needing emotional validation from trading. They stop defining themselves through short-term results. Instead, they focus on process, execution, discipline. This creates emotional balance. Now let us talk about mental frameworks that help develop self-mastery. The first framework is process over emotion. Follow your plan instead of following feelings. The second framework is awareness before reaction. Notice emotions before acting impulsively. The third framework is long-term thinking. Judge yourself over months and years, not individual trades. The fourth framework is emotional neutrality. Stay balanced emotionally during both winning and losing periods. Now let us talk about practical exercises. One powerful exercise is emotional journaling. Write down emotional reactions during trading. Write down moments of fear, moments of greed, moments of impatience. This builds awareness. Another exercise is practicing pauses before trades. Pause for a few seconds before entering. Ask yourself honestly, am I following my process or reacting emotionally? Another helpful practice is reducing emotional pressure through proper risk management. Smaller risk creates calmer decisions. Another exercise is reviewing emotional mistakes weekly. Look for recurring emotional patterns. Another important exercise is practicing patience intentionally. Spend time observing the market without forcing trades. This strengthens emotional control. Now let us go even deeper. The strongest traders are not people with perfect emotions. They are people who learned how to manage emotions effectively. They became calmer through difficult experiences, more disciplined through mistakes, more patient through frustration. This is how self-mastery develops. Now let us talk about confidence. Real confidence does not come from constant winning. It comes from trusting your discipline, trusting your process, trusting your emotional control. This confidence becomes stable because it is not dependent on temporary outcomes. Now let us talk about emotional maturity. Emotional maturity means accepting uncertainty calmly, accepting losses calmly, accepting slow progress calmly. This emotional stability changes decision-making completely. Now let us talk about another important truth. Mastering yourself is a continuous process. There is no final level. Even experienced traders continue improving emotional control. Continue improving discipline. Continue improving self-awareness. This growth never completely stops. Encouraging. Now, let us move toward the final message. Most traders spend years trying to master the market, but the real transformation happens when you begin mastering yourself, your emotions, your reactions, your discipline, your mindset. Because once you improve those things, your trading behavior changes naturally. Let me leave you with one final thought. The market will always test your psychology. Fear, greed, impatience, ego. These emotional pressures never completely disappear. But the traders who succeed long-term are the traders who learned how to manage themselves under pressure. They became calmer, more patient, more disciplined, more self-aware. And if you continue improving your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video.